It's Friday and it's 10 a.m. here in Lagos. Good morning and welcome to Business Morning. I'm Chimeze Obi Iwago.
And I'm Ladi Williams. Thank you for joining us. Thank God it's Friday.
Thank God it's Friday.
Yeah, let's get started with the global oil market. As prices pushed higher this morning, supported by firm U.S. economic data and expectations of a strong rebound in the global fuel demand in the third quarter, while concerns eased about the impact of any return of Iranian supplies. Brent crude futures for July gained 16 cents to $69.62 a barrel, while U.S. West Texas Intermediate crude futures for July was at $67.17 a barrel, up 32 cents. Brent and WTI are both on track to post weekly gains of about 5 to 6% as analysts expect global oil demand to rebound closer to 100 million barrels per day in the third quarter on the summer travel in Europe and the United States following widespread COVID-19 vaccination programs. Robust economic data from the United States, the world's largest economy and oil consumer, also buoyed risk appetite. The number of Americans filing new claims for unemployment benefits fell to the lowest since mid-March 2020, beating estimates and balancing expectations of a recovery in demand against a possible increase in Iranian supply. The Organization of Petroleum Exporting Countries and Allies, including Russia, a group known as OPEC Plus, is likely to stick to the existing pace of gradually easing oil supply curves at a meeting on Tuesday. Analysts expect Iran to add between 500,000 barrels per day and 1.5 million barrels per day of crude and condensates to the market once these sanctions are lifted.
And back here, the NNPC says it plans to acquire 20% minority equity stake in Dangote Refinery. It explains that the move is to ensure an undisrupted supply of petroleum products from the oil refining facility across the country. According to the NNPC Chief Operating Officer, Refining and Petrochemicals, Mr. Mustafa Yakubu, discussions are ongoing with the Dangote Group.
And still talking about Dangote, from Thursday, May 27, 2021, shareholders of the Dangote Cement PLC will be smiling to the banks with its declaration of a 16 naira per share dividend. The company stated this among other decisions at its hybrid annual general meeting. Do take a listen.
Mr. Chairman,
Dangote Cement PLC annual general meeting and the second virtual version since the COVID-19 pandemic.
Help our economy to grow.
Among other agenda for this gathering, which brings together shareholders of the company, is an appraisal of its performance for the year ended December 31st, 2020. Attendance is largely by proxy for the 397 shareholders controlling over 5.2 billion shares.
Shareholders are to cast their votes.
The company prides itself in its mission of providing strong returns for shareholders and is declaring a dividend of 16 naira per share.
Payment of 16 naira per share, subject to withholding tax, be declared in respect of the year ended December 31st, 2020, and made payable by May 27th, 2021.
Investors see this as commendable.
The Dangote Cement has proved itself to be one of the best cement industries that we have.
You can see the profitability has gone by 37.7% despite COVID, and this is very commendable.
Impressive as the performance for the year under review is, the company wants shareholders to look forward for a greater year 2021.
Q2 is yet to be finished, April and May, promising as well, but I cannot tell more for the time being. It looks like the cement market is still very buoyant, so we expect also very strong demand throughout 2021.
The company sees its tax payment as an indication of a healthy performance.
Our tax for last year was 97.6 billion. This year, first quarter was over 40 billion. And I'm sure as we go along, it will continue to increase as we ramp up more capacity in the company. It's true, our VAT in Nigeria alone is almost about 250 million daily, including Saturdays and Sundays. So it will continue to also increase as we go along, because we are trying to ramp up more capacity to meet with the demand of the, cement in the market.
For the company, efforts are already in place to meet the growing demand for cement, and this, the company believes, will be evident within the next 90 days.
Well, online businesses have taken the world by storm over the last 25 years. Companies like Amazon, Uber, Twitter, Facebook, Netflix, YouTube, Airbnb, Flutterwave, Paystack, and Jumia have transformed the global retail, transportation, entertainment, advertising, real estate, and financial services industries. They have also accelerated the growth of the gig economy, with people earning money from content they put on YouTube, working remotely as freelancers, and selling their products and services on Twitter, Facebook, LinkedIn, and a host of other digital platforms. Now, according to the World Bank, the global digital economy has been growing 2.5 times faster than global GDP over the last 15 years and is now 15.5% of global GDP. Tax authorities are aware of the enormous potential of online businesses to increase tax revenues and are taking serious action on the taxation of the digital economy. In fact, for 2 years in a row, Nigeria's tax laws have been fine-tuned to tax online businesses more effectively. These changes have significant implications for foreign and indigenous players as well as local consumers. Let's have this conversation with the Associate Director, Tax Regulatory and People Services, KPMG Nigeria, Akinwale Alao. Thank you very much, Mr. Akinwale, for joining us on the program. Good morning.
Yeah, good morning. Thanks for having me.
So, what is the general framework for the taxation of online businesses in Nigeria?
Okay, well, you know, the online businesses are first and foremost businesses, and the general framework that applies to them is the general framework that applies to businesses generally. So businesses in Nigeria, whether they are online or brick and mortar businesses, they are liable to direct taxes and indirect taxes. When you talk about direct taxes, you are talking about taxes like company's income tax or personal income tax. But in determining which tax would apply to a company, you then need to look at how the company is set up. What's the nature of the company? Is it incorporated or not? If it's incorporated, then it will be liable to company's income tax. If it is not incorporated, then it will fall under the purview of the personal income tax regime in Nigeria. And then if the company also carries on, transactions that create chargeable gains, then it would be taxed under this capital gains tax regime also in Nigeria. And then the other thing to consider are the circumstances under which the businesses may then be taxed under the company's income tax in Nigeria. So if the company is registered in Nigeria, for instance, it would qualify as a Nigerian company. It will be taxable on its global profits. But if it is incorporated outside of Nigeria, then it would only be taxed in Nigeria if it has a taxable presence, and that taxable presence will also depend on which country it is registered in. And then talking about indirect taxes, the general kinds of indirect taxes that would apply to the company are things like withholding tax, value-added tax, custom duties, excise duties, and stamp duties. The specific indirect taxes that would apply to the company will depend on the kind of transactions that it carries on. How does it deliver goods or services to its customers? So if it's a company that delivers goods, physical goods, for instance, then it may be liable to import duties where those goods are imported by it into Nigeria. The major indirect taxes that would apply to an online business would be the withholding tax and the value-added tax. Withholding tax because the corporate customers of that online business are going to deduct withholding tax from payments to it where that company has a taxable presence in Nigeria. And then value-added tax because of the broad definition of transactions that qualify for value-added tax in Nigeria. Once a service is enjoyed by a customer in Nigeria, then the provider of the service would be liable to VAT in Nigeria.
All right, Mr. Lau, first of all, how do you determine, taxable presence, and what measures has Nigeria taken to tax the digital economy?
Okay, thanks for that question. Well, taxable presence will depend on the regime under which a company falls or under which a business falls. So when you look at the company's income tax, for instance, if you are talking about a foreign company, the provision of the law that covers that is Section 13(2) of the Companies Income Tax Act. And for a long time, that provision was not updated. The last time it was updated until recently was in 1993. But in 2020, that provision was amended by the Finance Act 2020. The Finance Act 2020 created, some changes relating to significant economic presence. So where a foreign company now has significant economic presence in Nigeria, that was included as one of the scenarios under which the foreign company will be taxable in Nigeria. The Finance Act 2020 required the Minister of Finance in Nigeria to issue an order for the definition of significant economic presence, and that order was issued in 2020. It was made available to the public around May, but it had an effective date of February 2020. And under the significant economic presence regime, there are certain scenarios under which a company would be deemed to have significant economic presence. So if I would just mention them, the first one is where a company has a gross turnover that is more than 25 million naira in a year from certain activities, activities like streaming or downloading of digital content, activities like transmission of data collected about Nigerian users, activities like provision of goods and services directly or indirectly through a digital platform in Nigeria, or the provision of intermediation services through a digital platform. So that was one of the scenarios that was defined in the significant economic presence order for a foreign company to be taxable in Nigeria. Another of the scenarios is where the foreign company has a purposeful or sustained interaction with persons in Nigeria by customizing its digital page or platform to target them. So where you have a foreign company that does that, that foreign company will be liable to tax in Nigeria. The third scenario was a situation where the foreign company was using a Nigerian domain name, or it registers a website in Nigeria. And then the last scenario was where, the foreign company provides technical, management, consultancy, or professional services in a year, and it earns income therefrom. So those were the scenarios, and if we just exemplify it, so you are talking about maybe companies like Netflix that have users in Nigeria that stream video. That kind of foreign company, because it has users in Nigeria, is going to meet the criteria for creating a significant economic presence. So even though it doesn't have physical presence in Nigeria, it would be liable to tax in Nigeria. So you have a company like Spotify streaming, music. So all those kinds of companies that have users in Nigeria and are providing services to those users through digital platforms, they would fall within the scope of significant economic presence in Nigeria. So that's one of the measures that Nigeria put in place by introducing the Finance Act and the significant economic presence order. The other measure, was with respect to amendments made by both the Finance Act 2019 and the Finance Act 2020 to the value-added tax regime in Nigeria. So before 2020, there were debates about what would constitute place of supply rules in Nigeria. When would you say a foreign business provider has provided services in Nigeria? And that concept wasn't so clear, and it resulted in controversy that went to the courts. But with the amendment that was made, there is now a broad definition of what it means to carry on services in Nigeria. So just to summarize it, once a foreign company or a foreign business has customers that enjoy its services in Nigeria, that consume its services in Nigeria, then those services are deemed to be provided in Nigeria. And that kind of foreign company will then have obligations to register in Nigeria for value-added tax and to file value-added tax returns and discharge other tax obligations in Nigeria.
Now, are there key issues arising from the unilateral tax measures taken by Nigeria on the taxation of this digital economy?
Yeah, sure. There are some issues that have resulted from that. Because just to put things in context, there is a global movement to agree on an inclusive framework for the taxation of the digital economy. That started a few years ago, but it has dragged on a bit. There was a draft that was released in 2020, but there were concerns that draft resulted in a scenario where determining whether a foreign company had significant economic presence or was liable to tax in another jurisdiction was a bit complex. And even when that was determined, the tax that will be payable may not be seen as equitable. It may be too little, considering what the destination country, that's the country that has the users, would expect it to realize from the activities being carried on in its economy. So what Nigeria has done is to then enact legislation and issue an order to tax companies with significant economic presence in Nigeria and companies that provide services or that are deemed to provide services to users in Nigeria. There are concerns that countries like the United States may apply sanctions to countries. The United States has already indicated to other countries that have taken unilateral measures that there may be sanctions. The United States is also cooperating, with the OECD and other organizations to develop a robust framework that will be fair to all parties concerned, because the United States also has concerns with the framework that was issued by the OECD in 2020. So there may be retaliatory measures taken by other countries, especially developed countries, where developing countries introduce unilateral measures. So that's the major concern of many developing countries, that there may be sanctions against them.
All right, but what measures are Nigeria's fiscal authorities taking to enforce the new rules in Nigeria?
Okay, well, so part of the things that the tax authorities in Nigeria have been doing is to engage with the business environment. So there've been engagement, for instance, with the American Business Council. There's been engagement with consultants, just to ensure that more and more foreign businesses are aware of the new rules in Nigeria, because information, education is the first step to ensuring that companies are aware of their obligations and they can then be alive to those obligations. So that's one of the steps that the tax authorities has taken. The other step that's being taken is to simplify the value-added tax regime in Nigeria, because there's some form of complexity when you have foreign companies providing service to Nigerian customers. Sometimes those customers are individuals, and accounting for the value-added tax on those transactions then becomes complicated, because based on the tax legislation in Nigeria, the Nigerian person that enjoys a service is the one that is supposed to account for the value-added tax to the tax authorities. But because most of those Nigerian persons are not even registered for tax purposes to start with, there is tax leakage as a result of that. So the tax authorities are trying to put together a framework, very circular, or a guideline, to then ensure that the foreign businesses that are providing the services are the ones that would account for the value-added tax on business to consumer transactions. So that would kind of reduce the leakage that currently exists, where VAT is not being remitted to the tax authorities, even on transactions that are liable. So those are some of the measures being taken. We think that technology would continue to be critical, and that the tax authorities should therefore introduce technology to ease the means of registration of foreign businesses, rather than have to register via physically filled forms that are then submitted at tax offices. There should be a digital platform, where foreign businesses can register, and then they can file their returns. And the tax authorities are also thinking in that direction.
Right. Well, thank you very much, Akinwale. I'm sure there's a whole lot to talk about this, and hopefully in future we'll have time to discuss further on this particular issue. Thank you very much for spending your time with us this morning.
Thank you for having me this morning.
After the break, we look at crowdfunding business in Nigeria as the Securities and Exchange Commission directs platforms to comply by June 30 deadline. This is Business Morning. Do stay with us.
Welcome back. Still watching Business Morning. The Securities and Exchange Commission has directed all existing investment crowdfunding portals and digital commodities investment platforms to note the requirements and eligibility criteria for raising funds through and or operating a crowdfunding portal and comply with the registration requirements or cease operations by the 30th of June 2021. The rules governing crowdfunding business in Nigeria came into effect on the 21st of January 2021, which was part of efforts by the Commission to ensure investor protection while encouraging innovation in the conduct of the securities business. To make sense of this, joining us now is Mr. Ayodeji Ebo, Head Retail Investment at Chapel Hill, Denham. Mr. Ebo, thank you for joining us this morning.
Good morning. Thanks for having me.
Great. So let's first understand the concept of crowdfunding in investment.
Okay, thank you. The crowdfunding, simply put, is trying to raise little amounts, small amounts of money from a large pool of people. So typically is used for projects. Because of the hurdle of getting funding, whether equity or debt, for major projects, and also the size of some of the projects, most people across the world, you see businesses, non-governmental organizations use that to raise funds from little. So people come together, put their little money together based on the what I would say the value of what they feel they can part away with, and they are able to raise it from a large pool of people, and that's based on certain conditions or expected return.
Now, the SEC has directed crowdfunding platforms to comply with a June 30 deadline. Can we have a quick background of this guideline again?
Okay, thanks. I think the SEC noticed that if you look back in the last 4 years, there are a lot of crowdfunding platforms trying to raise funds for their project, especially within the agri space in the last 4 years. So I think the SEC came up with the guidelines, because one of the major role of the SEC is to protect investors, especially the retail investors that may not have that leeway to be able to understand. They don't have much understanding about investment, and they don't also have that capacity to do their due diligence. So last year, the SEC released an exposure draft, which is expected that people will give their input. Stakeholders, Nigerians will provide their feedback based on the exposure draft. And following that, and based on what we heard from SEC, they were able to take a lot of feedback, and the final draft, or the approved draft, was released early this year, I think around January. And part of what was stated was that currently, because it's an industry that is already operating, so those that are already operating, some of the operational standard or guidelines or minimum operational standard have been set. So they've been given about 90 days for them to comply and restructure their businesses. So SEC is not saying to shut down, but in line with these regulations, because what typically happens is if there are no major regulations, you will see some dubious people trying to take advantage of that and setting up platforms that are similar, and at the end of the day may eventually also rub off on those that are even genuine. So what the circular now is saying is that the June 30th deadline will still stand, and they are expected that if you have not, you should have applied at least to the SEC, and the ongoing registration process should have been done
So I feel this is in order, and all those that are currently operating without the application or without registration, think to also give confidence even to their investors by the time they see that they are also registered with SEC.
All right, Mr. Ebo, do you see the SPACs trend coming to Nigeria anytime soon? And how will these guidelines actually affect the special purpose acquisition companies?
Yes, I think that there's already a rule. So what the SEC is saying is that for the small and medium scale enterprises, so for the small, you can raise about 50 million. Medium, you can raise about 70, and small, you can raise 70, and the medium, you can raise about 100 million. And you're expected to be in operations for about 2 years. And what that is basically saying is that at least before you begin to use other people's investment, or those that may not have that capacity to do a due diligence on your business, you would have run effectively for about 2 years. So for the SPV that you are talking about coming to Nigeria and coming to raise funds, I think part of what the rule is saying is you also need to register. So there's already a structure that has been put in place that gives independent party. You have from the issuer, you have the crowdfunding intermediaries, you have the investors as well as the custodian, which is the bank. So I believe that once we operate, these companies operate within the confines of the rule, there will be no problem, and that would also help provide some form of confidence, because even there are a lot of funding that those platforms can attract, but a lot of Nigerians are still, or investors rather, are still skeptical in terms of the structure, in terms of the licenses that most of these platforms have.
Now, the guideline states that retail investors cannot invest more than 10% of their net salaries in crowdfunding activities. How do you think the SEC can implement this?
Very interesting question. I think that it will just be at the point of investment. Investors may need to just disclose what their annual salary is, and it's based on that they can be tracked. That it can be tracked based on the amount that you're investing. But if we also look at this, it may look, yes, it may be difficult to track, but looking at it from an investor's perspective, what SEC is also helping you to achieve is a bit of diversification. So don't invest more than 10% of your salary with one crowdfunding, with one firm or one fundraiser, if I put it that way. So it means you can look at different fundraisers and invest and spread your risk. This is what we call diversification, because if you are this form of this investment that most of them go into is high risk. Yes, there are insurance that are provided to also minimize the risk and also be able to they are able to recover something in the event of a major disaster or a major breakdown. So I think that it may be very difficult for the SEC to track, because it's based on what you put inside what you state rather on the form when you are trying to subscribe. But also investors should note that this is also to protect them, especially these rules that have been stated, like SEC said, is basically for retail investors that don't have the capacity to go to check the company, whether it's in Port Harcourt, whether it's in Abuja. They are trying to protect it so that you are coming to a platform that is being regulated and they can easily track. That would be like a check for the companies, those that are trying to raise the funds, and they will also be able to monitor the utilization of the funds.
All right, so can you talk us through who are the major participants in this market and their specific roles?
Okay, very interesting. Based on the rule, I think there are 4 major participants within this market or stakeholders. So starting with the fundraiser. The fundraiser is the company that requires the funds. What we have before is the company that requires the fund that also create a platform to raise this fund, and they are also the one that warehouse the fund. So you can see that they control everything based on the current structure. Then with this new structure, apart from the fundraiser, you now have who you call the crowdfunding intermediaries, and they are also expected to be registered with the Securities and Exchange Commission. So this is like an intermediary between the fundraiser, then going to the third class of stakeholders, which is the investors. So they are the intermediary between the investors and the fundraiser. It is expected that the crowdfunding intermediary would have done some form of due diligence on the fundraiser before opening it up for the investors to put in their funds. So that will create some form of credibility, will create some form of assurance, and that would also help to attract more funds into that system. And the last one is the custodian, which we can also say the bank that warehouse that. So it means that you have 4 different parties, and that is what you there will be no conflict of interest, and there's delegation in terms of the controls are really very tight. So yeah, from the fundraiser to the crowdfunding intermediary, the custodian, as well as the investors, this would give some form of credibility and will be able to attract more funds to the program.
So how will this new guidelines shape the crowdfunding space?
Okay, thank you for this very valid question. I think that it's really going to add some form of confidence to the crowdfunding space. We've had a lot of defaults within, especially when we talk about the agri-tech, a lot of default because some of these guys really are not experienced in terms of running a business. So some may not genuinely, the business might have gone bad, but what SEC, part of what they will be asking them is, what's the risk management structure that you have on ground if this happens? So there will be a minimum operating standard. You have like an internal audit person that goes through the records, someone that you'll be able to keep accounts. There will be no commingling of funds. So I believe that is really going to add to the credibility of the crowdfunding space, and with the nature, especially the agri space that have been making use of this platform. Getting funding from the bank is always very challenging. But I believe that there's a pool of funds that they would attract once this structure is put in place, because it will reduce in terms of the default rates. And I believe that as we progress, even the amounts that has been capped based on the 50 million to 100 million may be reviewed as SEC sees how things are going and how they are expanding within that space.
So recently there was a story of investors losing about 2 billion naira to a fraudulent company that promised about 60% per annum. How can investors guard against this kind of scam?
Yeah, thank you. I think the first thing is that for the investor, you need to try to research into what you are trying to invest in. So when you look at the current instruments, available instruments in the economy, you would see that there's always a base. So you see treasury bills at 9.75% for 1 year. You see bonds at a maximum of about 14%. So that should give you an idea of what they can return. Yes, the type of business that they go into may generate higher return. But once you see, once it's getting above, when you are leaving the fixed income space, there's no return that is not guaranteed again. So even within the agri space that they promise guaranteed return, it should not be guaranteed. It's like a target return, because anything can happen within the process. So once anyone is giving you a guaranteed a guaranteed investment rather, even FX, you see people guaranteeing, giving you a guarantee for a return in FX, then you should run, because markets all these markets can be very volatile. And that is why you see for mutual funds, the fund manager will only give you the target return, because it is based on the available instruments that will determine the total return at the end of the day. So it's really important that once it's not a fixed income investment that you are buying the instrument, anyone promising you a guaranteed or a fixed amount, then I think you should question it, because what you should be promised is an expected return. Then you now understand the risk. But once it's also getting significantly high, and two times of what the Treasury bills is doing per year, or the bonds is doing, then I think you should also be very careful. But if you even have to do it, then look at what we call value at risk. How much can you part with? So if this money doesn't come back, will you set you back significantly? So once you look at some of those, put in some of those situations or those scenarios, then I think that you will be covered. And that is why I would end with this. The SEC is also trying to protect the retail investors that don't have that capacity to do all this due diligence or understands how even investment works.
All right, Mr. Ebo, I guess the key word is, if I hear guaranteed profit, I run. Thank you so much for that advice. I guess we'll leave it there, Mr. Ebo. Thank you so much. Mr. Ebo, Ayodeji Ebo is the head retail investment, Chapel Hill, Denham. Thank you for your time. We're still looking at the markets. Let's see with Aniete now. Aniete, you're back on.
Okay. Ladi, sorry for that breaking transmission from my side. Okay, market is down by almost 0.5% as of yesterday, Thursday, and that's no thanks to the the 2.9% drop on Dangote Cement share price. Of course, the market was in the green territory that as of yesterday, but that market behemoth just pull the NGX All Share Index back by 0.49%. And of course, you can also see the impact that it had across the sectoral across the sectors. So let's join Afolabi Gberu, who's a stockbroker at IBTC Stockbrokers, to give us an update. So good morning, thank you for joining us, Afolabi.
Good morning, Nite. Thank you for having me.
Yes. So the month of May has been, of course, the market has just about 2 trading sessions left, and many of the stocks are trading at almost their intrinsic value. So is this the best time for new investors to come into the market?
Yes, most definitely. If you have cash that you can play with, this is definitely a good time to look at some of the names in the market. Like you mentioned, there's some decent prices that are available now, especially in the banking sector, the likes of GTB, Zenith. These are decent values if you're looking when you're a long-term investor. It's a good time to lock in on these prices.
Thank you for bringing us up to speed, Afolabi. Okay, so let's cross over to the unlisted securities market. It's down. Yesterday was up, but today it is down, and that's of course because of some sell-off there. Volume was also weak. Then over to the debt market, there was renewed interest. Investors' appetite was strong, and that's because the CBN had carried out its primary market auction, where it offered about 63.1 billion naira worth of treasury bills. So to give us an update on the fixed income market, let's join Ifeoma Onyejekwe, who's a fixed income dealer. Okay, sorry, I don't think we can connect to.
We don't have the moment, but let's see how the market ends the week today. Let's hope it ends in the green.
We hope so.
All right.
Yeah.
All right. Thank you so much for the update, Anita. All right, we'll take another quick break, and when we come back, we'll do an opening call to London. This is Business Morning.
And for our London morning calls, let's have Juliana. Good morning, Juliana. Well, Chancellor Rishi Sunak says he did not give special treatment to the now collapsed bank Greensill Capital following an intensive lobbying campaign by former Prime Minister David Cameron. He was before Parliament's Treasury Select Committee. What more did he tell them?
Good morning, Chimisi. Well, yeah, the Treasury Select Committee, pretty influential cross-party group of MPs, are investigating basically what happened that led to the downfall of Greensill Capital in March and the intense lobbying that took place beforehand to the Treasury and to the Bank of England, which involved the former Prime Minister David Cameron. David Cameron has already sat in front of this committee a couple of weeks ago, as well as the founder, Lex Greensill, seal. Yesterday was the turn of the Chancellor Rishi Sunak, and he pretty much defended his actions. Of course, there were a series of pretty embarrassing text messages that have been revealed during the course of the investigation, two in particular that was sent from David Cameron to Rishi Sunak. Rishi Sunak basically said he even had no idea that the former Prime Minister had his phone number, but he defended his team. He believed that they went through all of the due process, and that evidently the fact that they weren't given this extra money that David Cameron was looking for is enough to kind of exonerate the Treasury Committee. So to be honest, it didn't really make much news this week, probably because of the Dominic Cummings scandal that's embroiling Westminster at the moment. But it's worth mentioning that David Cameron, the former Prime Minister, has been exonerated of any wrongdoings, and he has denied that the lobbying was in breach of the parliamentary code. However, he does still, going forward, that he wouldn't harass ministers via text, only via email.
Interesting. Well, Trade Minister Greg Hands has said British farmers had nothing to fear from a proposed free trade deal with Australia. What exactly are the concerns of the British farmers over this deal?
Yeah, there were some major concerns. This post-Brexit trade deal between Britain and Australia would be the first post-Brexit deal that has actually been created from scratch. All of the other deals that have been signed by Liz Truss, the Trade Secretary, have basically been a rollover for what had already existed within the bloc. I believe trade between Australia and Britain is worth about £1 billion every single year, and their hope that a free trade deal will save British businesses over £100 million a year. The only problem is a lot of the produce that would be coming from Australia into Britain, we already produce here. Lamb, beef, just being one of the two. I know wine is also a big favourite for Brits from Australia. So farmers' unions are not happy. They do feel that they're going to be undercut. They're also concerned that the quality of meat that will be coming into the UK will be an issue. But of course, you know, one of the reasons why we did a Brexit was to forge some of these new trade deals. So the Prime Minister clearly seemed to be more siding with the Trade Ministry team. According to them, they're just a few days away from signing the deal. Scott Morrison, the Australian Prime Minister, will be in Cornwall in a couple of weeks at the G7 meeting. He's been invited, and I think the Prime Minister really wants to wave the flag and seal the deal before that time.
Well, Juliana, the market is just waking up, and hopefully we'll talk to you later today to bring us up to speed with the market trend today. In the meantime, enjoy the rest of the day. All right, let's take a peep into the crypto market with Ladi. Well, there is still a lot of pullback in that crypto market. Ladi, by the way, did I hear someone say crypto will cause the next financial crisis?
Yeah, that's another big one there. You know, this is the, I keep calling it the FUD season in the crypto market. So this is from he deals in metals, and he has been in the market for a long time, and he says that what he sees, with the crypto market, that it could lead to a massive financial crisis. But, crypto doesn't have many fans. Let's look at the Fear Greed Index. Extreme fear today, 21 points. Look at the market cap, $1.60 trillion traded this morning, down about 5.87%. 24-hour volume is down 18.11%. Bitcoin dominance, 43.16, up about 0.82% this morning. The price of Bitcoin, 36,889 this morning at 8 a.m., down 3%. 24-hour volume, $41.40 billion traded. Bitcoin is looking rather weak in the short term. It is still holding this 30 range, but some traders believe it could go as low as 31,000, by this weekend. Who knows? And now let's look at price of Ethereum, $2,555, down 6%. Let's talk to Michael Inaji, our digital market analyst. Hello, Michael.
Hey, Laddie, how are you? Good afternoon. Happy Friday.
Good morning here in Nigeria. How's it going? Well, Michael Saylor is proposing a Bitcoin mining council to, tackle the concerns with mining Bitcoin. But some analysts believe it's taking away the decentralized nature of cryptocurrency. What do you think?
So what I think about that is it has a lot to do with the ECG concerns. So that's the environmental, social, and governance concerns that most companies are going to be facing. By 2025, ECG investing will be about 53 trillion thereabouts of 153, about a third of all the capital under management by professional investors. It's going to make about a third of that. And so going forward, you have this overall mandate that people who manage large institutional pools of money are supposed to be investing in sustainable projects and ideas. And fundamentally, the reason why you have Michael Saylor creating things like the Bitcoin Mining Council is you have investors who have this appetite for what's called a clean Bitcoin, basically a Bitcoin that's mined in just mined in a more sustainable way. Because frankly, with the court case that we just saw with Shell having in the Netherlands having to reduce their emissions by half, you can see ECG based investing having a big theme, and companies being divested from if they don't have a sustainable path forward. So it really is in Bitcoin's best interest to present a more green type of environment, because that's going to be the catalyst that brings all the institutional money in. Because frankly, right now with all the Elon FUD of Bitcoin being mined from unrenewable resources, we need to improve the overall optics of the industry, and maybe that has to be like a self-led movement. It's definitely needed. For the next wall of institutional money to come in, there definitely needs to be an ECG aspect to crypto to make sure that all the institutional participants coming in don't feel like they're hurting the planet, and they can look their board in the face and say it's renewable.
All right. So, Michael, do you expect more FUD in the market, and how should retail traders be trading right now?
Yeah, I definitely expect more FUD going forward. Like Bitcoin is, it's a permissionless open network that requires no government to run it. And of course, moving forward, you're going to see institutions get scared by that, including governments themselves. So the FUD is expected. You're not going to become a $100 trillion asset by taking a walk in the park. There will be some fight, but ultimately the battle has been won. It's just a matter of adoption at this point. But yes, I'm 100% expecting more FUD. When Bitcoin is weak, I would expect people to fight it. It's just part of the game at this point. You hit us when you are the weakest, not when we're the strongest. So it makes a lot of sense that it's happening now, not when we're at all-time highs.
I guess it's time to have a diamond hand. So what do you see the price of Bitcoin going this weekend?
So I would say Bitcoin looks fairly weak to me on occasions. All indications are saying to me there's a chance we go lower towards about 20K. But the six-figure Bitcoin is still intact in the next 12 to 18 months. Just a situational awareness of knowing that the 4-year microcycle might be lengthened. We might have a correction similar to 2013, 2014. There's a chance that there'll be a cool off for the next 6 months where we go back down to 20K. But, 6 figures is still intact in the next 12 to 18 months for one single Bitcoin. But you should see some kind of cool off in the short run, because it's been a very, hyper market since the beginning of the year.
Okay. All right, Michael. Thank you so much. Thank God it's Friday. Have a great weekend.
Thank you too, laddie.
Yeah, so top auto market cap all down. BNB down 5%, $339. ADA down 8%. XRP below $1. Jimmy, not looking good.
Well, Ladi, if you promise me return on investment in this market, I will run away. Remember what Ayodeji said. Particularly this market, I will definitely run away. I guess the energy consumption of Bitcoin is actually taking a toll.
It is
on
taking a toll.
The market right now. So perhaps when they find a solution to that, maybe move to greener energy. Remember, that was the concern of Elon Musk there. In any case, as you continue to trade and play in this market, just be careful.
Nothing is guaranteed.
Absolutely. All right, that's it on the program for today and, of course, for the week. Thank you for watching. I'm Chimeze Obi Iwago.
And I'm Ladi Williams. Thank you for watching and have a great weekend.